Hello and welcome back to What's Next. Recent research from Goldman Sachs has highlighted that decreasing electric vehicle battery prices are poised significantly to boost demand for electric cars in the U.S. The affordability of electric vehicles is crucial to expanding their market presence. Most consumers are unlikely to abandon their familiar gas-powered cars solely out of a desire to be environmentally conscious or to support climate initiatives. Instead, tangible economic benefits must drive the transition to electric vehicles. One of the primary factors that need to change is the cost of batteries. Fortunately, there is a promising news on the front. The prices for lithium-ion batteries are expected to continue their rapid decline over the next several years, as reported by Goldman Sachs researchers. According to Goldman Sachs, the average price of global battery packs is projected to fall to $82 per kilowatt hour by the year 2026. This forecast represents a dramatic reduction, nearly half of the current average price of $149 per kilowatt hour in 2023. Additionally, this reflects a significant 26% decrease from the battery costs seen this year. The researchers also predict that by the end of 2024, battery costs will be approximately $111 per kilowatt hour. To emphasize the progress in battery tech and pricing, it's notable that just a decade ago in 2013, the cost of the same batteries was a staggering $780 per kilowatt hour. This drop in battery costs illustrates the rapid advancements in tech and manufacturing processes. Goldman Sachs emphasizes that reaching an average price of $82 per kilowatt hour in 2026 will be a critical milestone for the U.S. electric vehicle market. At this price point, battery electric vehicles are expected to reach cost parity with gasoline-powered cars in terms of ownership expenses, even without subsidies. Presently, the average price of a new electric vehicle is significantly higher than that of a comparable gas model, although the overall cost of ownership for EVs can be lower due to reduced fuelings and maintenance expenses. New models, such as the Chevy Equinox EV, which starts at $35,000 and offers a range exceeding 300 miles, are examples of how the market is evolving. However, such models are not yet the standard. Traditional automotive manufacturers still face challenges in turning a profit on electric vehicles, largely due to high battery costs and limited production volumes. While purchase incentives, such as the $7,500 EV tax credit, provide some relief to consumers and manufacturers alike, they cannot sustain sales indefinitely. For EVs to gain momentum and acceptance, they need to be clear, economically advantageous choice for consumers. Goldman Sachs projects that achieving parity in total ownership cost will spur a substantial resurgence in electric vehicle demand in 2026. This projection is logical, especially given that the prices of new cars are currently exorbitantly high, compounded by rising interest rates which further strain consumers. Many people find it challenging to justify paying extra for an unfamiliar tech when conventional cars are readily available at lower prices. This reluctance is a significant factor contributing to the current slowdown in electric vehicle demand growth in the U.S. According to Nikhil Bhandari, co-head of Goldman Sachs Research's Asia-Pacific Natural Resources and Clean Energy Research, we anticipate a robust recovery in demand by 2026, primarily driven by economic factors. This is likely to mark the beginning of a consumer-led adoption phase. Bhandari identifies two primary factors contributing to the faster-than-expected decline in battery prices. First, technological advancements have enabled manufacturers to create batteries that store more energy at a reduced cost. Secondly, the cost of essential battery metals such as lithium and cobalt are decreasing. In recent years, the surge in demand for those metals, combined with supply chain issues, led to soaring prices for both batteries and their raw materials. However, as additional mining and processing capacity is brought online, these prices are now beginning to decline. Goldman Sachs expects a steady decrease in battery pack prices through 2030, which will benefit both EV manufacturers and consumers. By the end of the decade, researchers project that global average battery pack prices will reach around $64 per kilowatt hour. This would represent a remarkable reduction, approximately one-third of the average battery price recorded in 2019. The anticipated drop in battery costs will have far-reaching implications for the electric vehicle market in the U.S. Cheaper batteries means lower overall costs for electric vehicles, making them more appealing to a broader segment of the population. As battery prices approach the crucial $82 per kilowatt-hour threshold, manufacturers will be able to offer electric vehicles at prices comparable to their gasoline counterparts, thereby removing a significant barrier for potential buyers. Furthermore, the combination of declining battery costs and improved tech is expected to accelerate the development of new EV models. As automakers can produce vehicles at lower costs, they will be more incentivized to innovate and bring a variety of electric vehicles to the market. This influx of options will cater to diverse consumer preferences, whether they're looking for compact cars, larger SUVs, or performance-oriented models. The role of infrastructure. While decreasing battery costs are vital of a piece of a puzzle, it is also essential to consider the development of charging infrastructure. As electric vehicle adoption grows, the demand for accessible and efficient charging stations will increase. Investments in public charging networks and the expansion of home charging options will be crucial in alleviating range anxiety for potential buyers. A robust charging infrastructure can reassure consumers about the convenience of owning an electric vehicle. This includes not just the ability for charging stations, but also their speed and reliability. As charging technology continues to advance, faster charging times will make EV ownerships more practical, further driving demand. In addition to economic factors and infrastructure improvements, increasing consumer awareness and education about electric vehicles will play a critical role in boosting demand. Many potential buyers still harbor misconceptions about EVs, such as their range capabilities, maintenance needs, and overall costs. Educational campaigns highlighting the benefits of electric vehicles, including their lower operating costs and reduced environmental impact, can help change public perception. As more consumers become informed about the advantages of electric vehicles, it'll likely lead to increased interest in sales. In summary, the anticipated decline in battery costs as forecasted by Goldman Sachs is said to be a pivotal factor in reviving electric car demand in the U.S. As prices approach parity with gasoline vehicles by 2026, it'll encourage more consumers to consider making the switch to electric. However, to achieve this potential, the industry also has to focus on developing a robust charging infrastructure and educating consumers about the benefits of electric vehicles. The combination of affordable electric vehicles, improved tech, and an informed public will pave the way for a more substantial transition to electric driving. As the market evolves, it'll create new opportunities for manufacturers and consumers alike, ultimately contributing to a more sustainable automotive future.